Well, good morning, everyone. Today is April the 8th. It's a Wednesday, and today is a big day. Why? Because on Wednesdays, I give you a complete trade with an option and the strike price and the logic and the analysis for everything. Before we get into it, though, let's talk about global economy. Global shares, well, they fell on Wednesday. More uncertainty over the coronavirus. Rally on Wall Street yesterday was very short-lived because of the energy prices. Goldman Sachs said Japan's economy is headed for a record 25% contraction because exports diving by 60% in the April-June period. The contraction for the world's third largest economy behind China, that's the second largest economy, would be a record since GDP or gross domestic product began to be tracked since 1955. Japan's economic activity will likely recover with the third quarter, and GDP is expected to grow 3.1% in 2021. So all in all, things will be looking better, but not quite yet. While many investors are preoccupied with the pandemic, energy remains another major factor. Oh, we're aware of it. The meeting of the so-called OPEC is due to be held tomorrow. It was delayed amid bickering between Saudi Arabia and Russia following a meeting in March, and it wasn't pretty. Even Thursday's meeting was in doubt after Iran demanded greater clarity on the scale of U.S. production before talks started. Many professional investors, including myself, say they've been wary of recent upsurge in share prices and expect more volatility. That includes me. The S&P rallied nearly 19% since hitting a low in March 23rd. It's still down 21% from its record highs of February. And the coronavirus claimed at least 82,000 lives around the world, infecting more than 1.4 million people. The U.S., congratulations, U.S., we lead the world again in everything, including coronavirus cases. Confirmed cases nearly 400,000. So I don't think we're going to get out of this anytime soon. I think we're going to have a lot of congestion, a lot of choppiness, and a lot of consolidation, but I don't think we're out of the worst period yet. Now, let's talk about trades. Since the market is bearish, and last time we focused on the upside, let's focus on the downside. Now, these are the 10 major S&P 500 sectors. Look at the weakest one, energy. And we already know, based on the news, we already know right here that that OPEC meeting that's due tomorrow, probably nothing's going to happen good. Now, we know the energy sector is the worst sector. We got industrial, financial, energy. Energy is the weakest one. Why not choose a pullback strategy on the weakest sector? Makes sense, right? If you look here, this is the XLE energy sector in the S&P 500. This is actually specifically this ETF that we're looking for. This is XLE ETF, and this is an XLE ETF. Notice we made a low of about 22, and we rallied all the way to 33. And now, as trends go, it's time for this to move down once again and try to test the low, or it'll break higher and we can get out right here at this gap, which is at 37. So we short it right around 31, doesn't work our way, we get out right around the 36 level if we see it filling up the gap. Now, if we were to buy options for this, we're right now at about the 32 level. We're going to open up at 32.50. Let's look at option prices. And let's go out. Let's see here. Let's go out about, now I'm not planning on holding this trade for more than 2 weeks, but just in case we don't want to have a lot of volatility, how about we give ourselves 45 days? That way, even if the option starts to decay, we're still good for about 2 weeks. So we'll pick the expiration of 5/22, and we're going to go to the put side. Since this energy stock sector ETF is at 32, we'll pick the 32 strike price. Let's see here. And we'll go right in the money. We should actually go a little higher. There's not a lot of open interest here. Let's find an option that has a little more open interest. How about the monthly? Let's go to the 70. Yeah, this is better. This has 73 days till expiration, but it'll keep premium well. So we'll go to the 6/19 expiration because there wasn't a lot of liquidity or open interest in the 5/22 week. So we just go to the next one. We've got 73 days left, and these options are not expensive. How about, ooh, look at this juicy volume and open interest. How about, since it's 32.08 right now, we go right close to the money. How about the 32 strike price? It's 370 by 440. It's going to open somewhere in that ballpark, probably close to 370. Still not very expensive. If this option doesn't go anywhere, the option will probably cost about $3 when it's all said and done in about 2 weeks. So there's not a lot of implied volatility or premium in this option, but we have good open interest and liquidity, volume and liquidity and open interest. So again, let's go with the 32 strike price put. It's going to be right around $3.70 to $4, right around the $4 range. And in terms of price action, what I'd like to see is don't just sell this thing. I mean, don't just buy this put. Buy this put if we break today, if we go down to 31.92. If we go to 31.92, you want to buy this put. And if we break above 36.95, you want to liquidate this put. So the entry would be on a sell stop at, not on the option, on the underlying asset. You would just buy the put if the underlying asset hits 31, let's say 31.90. If it hits 31.90 on a sell stop, you go short, you buy the put option, or you go short this asset. And if it breaks to 36.95, you liquidate the option. You don't use stop orders on the option. You use limit order on the options, but you use stops on the ETF. Now, profit target is right around the 22 level, 23 level. I'd like to see it test the previous low. So we're going short around 31.95. We're getting out around the 37, 36.95 level. So high 31s we get in short. Low 30, high 36, low 37s we get out if it doesn't go our way. And we take profit at the 22, 25, 23-ish level. Again, you can always rewind this video. Now, everything I just said, all these stops are on the XLE ETF. If you're trading option, you would just simply buy the option, buy the 32. Let me just go back here. I'm going all over the place here today. Then you would just buy the put. You would use a limit order on the put. You would get the 32 put. If we execute the short trade on the underlying, you would buy the put. If we get stopped out, you would liquidate the put. If we take profit, you liquidate the put, but you're buying a 32 put. Hope that helps. Again, we're going with the weakest sector. We found a pullback to the upside, so we're going to take advantage of a pullback to the downside to trade the energy market. We're looking for the weakest. That's the pullback. We're going with the downtrend. We waited for a pullback, and now we're waiting for another leg down. And again, you could use a sell stop to get into this on the short side, and you can use a buy stop to get back out of this trade to buy back. And if you're trading the option, you're just buying the put and liquidating the put. You never use stop orders on puts. You use limit orders. Hopefully that helps. Now, before I let you guys go, I need to come clean about something. I've been keeping a secret from everyone. Yes, I've been keeping secrets. Everyone's got secrets, even me. For the past few days, I've been pulling major strings. I mean major strings to get a high-profile trader on short notice. Folks, I only want you to be exposed to the best traders. Booker, Tom, Busby, Josh Martinez. I got one other guy. This guy is a true market wizard, all right? I don't even think I'll be able to get him back in the same trading room again once this is over. This guy's a big shot. This trader, get this, he developed a system, a never-before-seen system that allows you to make, this guy made $1 million in 30 minutes. I'm not kidding. He made a system that allowed him to make $1 million in 30 minutes. Now, I've made $1 million on a drive to Vegas once, but I don't think it was over 30 minutes. This is big. And Thursday at 1 p.m. Eastern Time, you could get behind the scene and look at the strategy that could double, triple, or even make 20 times your money while the S&P loses a third of its value. I'm not kidding. This is big. You guys do not want to miss this, and I've never had him on one of my webinars before. This is not a time to waste. This is not time to waste the resources you could have at your disposal. This is opportunity time. Click the link below or at the bottom of this, at the end of this video, to get free access pass to this event. Again, I've never had this trader on. This guy's made $1 million in 30 minutes. He's a real hedge fund trader. He's the real deal. You're going to see opportunities to double, triple, quadruple, even make 20 times your money while the S&P is moving down. Click the link below or button at the end of this video. Get free access pass now. You don't want to miss this. I pulled a lot of strings to get this guy there. I expect you guys to be there for this class tomorrow. 1 p.m. Eastern time. Don't miss it. 1 p.m. Eastern time. If you miss it, I'll be very upset. I'll see you guys tomorrow and enjoy this trade. Talk soon.